Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week's focus is on the review of banks' 3 months 2025 financial performance. Stock investors must regularly track the quarterly financial results of publicly listed companies. These financial results offer important insights into how effectively a company uses its assets to produce revenue and profits from its main business operations. By analyzing key financial metrics such as revenue growth, profit margins, and cash flow, investors can more accurately evaluate the company's operational efficiency and overall financial stability. Understanding these metrics allows investors to make well-informed decisions regarding their investments. Specifically, they can determine whether to maintain their current position, to hold, to divest their shares, which is a sell, or increase their investment, which is a buy more, based on the company's performance trends and market conditions. By closely tracking quarterly results, investors are empowered to navigate the complexities of the stock market and make strategic choices that align with their financial goals. The Securities and Exchange Commission (SEC), the apex investment regulator, requires all listed companies to file their unaudited quarterly earnings within a maximum of 30 days, which lapsed on April 30, 2025. However, companies are allowed to seek extensions if they are unable to meet the deadline to avoid being fined. This update also assists investors in managing their expectations and planning accordingly. This week, we will focus on the financial performance of quoted banks on the Nigerian exchange. The banking sector accounts for over 40% of total volume on the Nigerian exchange and is important in any economy due to its financial intermediary function. 9 out of the 11 quoted companies have published their unaudited 3 months 2025 or Q1 2025 scorecards. The outstanding banks are Jaiz Bank and Unity Bank. Following Nigerian banks' successful capital raise to strengthen their capital base, we believe the additional capital will strategically reposition them to pursue large ticket transactions, which should positively impact interest income. Looking ahead, further rounds of capital raising are possible as banks work towards meeting the CBN's 2026 recapitalization deadline. However, certain headwinds may emerge in 2025. These include a potential decline in interest rates, which could compress net interest margins and reduce volatility in the foreign exchange market, likely limiting FX-related gains that significantly boosted earnings in 2024. Nonetheless, with stronger capitalization and improved regulatory compliance, the banking sector is better positioned to navigate macroeconomic shifts and unlock long-term value for investors. The bank's total gross earnings and profit after tax (PAT) for the first 3 months of 2025 stood at 5.4 trillion naira and 1.4 trillion naira respectively, relative to 4.2 trillion naira and 1.3 trillion naira in Q1 2024. Accordingly, the bank's gross earnings and PAT grew by an average of 29% and 1% year-on-year respectively in the first 3 months of 2025. Access Bank continued its positive trend with a 39% year-on-year increase in gross earnings to 1.4 trillion naira in the first 3 months of 2025 from 974 billion naira in the first 3 months of 2024. This can be attributed to the 79% year-on-year raise in the fair value and foreign exchange gains to 214 billion naira in Q1 2025 as net interest income dips by 21%. As a result, PAT increased by 15% year-on-year to 183 billion naira in Q1 2025. Zenith and UBA followed similar remarkable trends with 22% and 37% year-on-year growth in gross earnings to 950 billion naira and 712 billion naira in the first 3 months of 2025. Also, PAT grew by 21% and 33% to 312 billion naira and 190 billion naira respectively. The impressive performances can also be linked to improvement in interest income on customers' loans and advances, higher income on fixed income instruments, as well as FX and fixed income trading gains. However, GT Bank recorded declines of 27% year-on-year and 44% year-on-year in gross earnings and PAT to 497 billion naira and 258 billion naira respectively. The decline is due to the significant reduction in FX revaluation gains year-on-year. First Bank Holdings also followed a similar trend with declines of 1% and 18% in gross earnings and PAT to 797 billion naira and 171 billion naira respectively in Q1 2025. The mid-level banks also recorded a strong financial performance in the first 3 months of 2025. Fidelity, Stanbic, Wema and FCMB recorded notable growth in their gross earnings with a year-on-year growth of 64%, 29%, 72% and 41% to 315 billion naira, 234 billion naira, 140 billion naira and 253 billion naira in the first 3 months of 2025 respectively. Similarly, PAT grew 190%, 80%, 271% and 12% year-on-year to 91 billion naira, 82 billion naira, 41 billion naira and 32 billion naira in the first 3 months of 2025 respectively. In the first 3 months of 2025, most banks showed improved performance, although this was a slowdown compared to the year-on-year growth in 2024. This advancement positively influenced their share prices, helping to ease concerns about potential dilution linked to the public offering that increased the number of shares in circulation. Consequently, adopting a long-term investment strategy is recommended as new capital base is expected to yield medium to long-term benefits. In the short term, however, anticipated returns in some of the banks may be limited due to the slowdown in financial performance in 2025 relative to 2024. Investing in stocks involves a certain degree of risk, meaning that there is no assurance that your initial investment will be preserved. However, stocks generally offer the potential for greater returns compared to more secure investment options such as fixed income securities. When deciding how much of your portfolio is dedicated to stocks, it's essential to assess your personal risk tolerance, your comfort level with market fluctuations as well as your age. These factors can significantly influence your investment strategy and the time frame you have for achieving your financial goals. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week.